Welcome to another episode of our Capital Ideas podcast, where we get to know the people behind the portfolios. We spend time with our portfolio managers and analysts, hear some of their ideas, lessons learned, investment edge, something about Capital Group as well. Today, we have Lisa Thompson with us. Lisa's an equity portfolio manager based in New York City. She's been at Capital Group for 31 years. Welcome.
Thank you very much.
Glad you're here. So I'm going to paint you a picture of this three-circle Venn diagram. And in the three circles are mathematics, architecture, and cooking.
Yes.
So no one would assume the shaded area would equal sign investing.
Yes.
Tell us a bit about how you got here.
Well, I studied math in college. I loved that, but at the end, when I was a senior, I was like, I don't want to be a mathematician. That's not something that I'm interested in. But I didn't know what I wanted to do. I did feel strongly that I wanted to have passion about what I was doing, and I wanted to be reasonably good at it, right? And so I did think about architecture, and later on, I did actually consider being a chef. And in both cases, I went and worked in a small architecture firm. And while I was on Wall Street, I went to cooking school at night, which was pretty crazy.
It was a long day.
A very long day, very long 9 months, let's put it that way. And I realized in both cases they, for different reasons, weren't the right field for me, but never regretted the experience because I sort of quenched that thirst, so to speak. I started out doing quantitative research on Wall Street. Didn't love it, actually. Thought it was too backwards looking, but was super fortunate that at the time I was at a firm called Nomura Research, and they were starting up a Latin American equity research group in the early 90s. So this was pretty unusual. And they had a guy, Jorge Mariscal, who was starting up the effort, came from Chase. He was on the debt side. And, good fortune for me, not a lot of people were doing it. And he gave me an opportunity, which I am super grateful for, loved it. And then a little while later, he and I both went to Goldman Sachs. At Goldman, I got to know some people at Capital, including an analyst who did mining in Mexico named Rob Lovelace. Wow. And that's how I came to Capital.
You mentioned emerging markets in the early 90s, and there was this currency crisis in Mexico. The currency devalued, the stock market went down a lot. You mentioned Rob Lovelace. Right. Bring those things together and talk about taking on coverage in the, 94, 95, in the early 90s?
Yes. So yes, I joined Capital in 94 and right before the peso crisis. And then Rob was transitioning to being a portfolio manager. And one of the stocks that he followed and was called Telmex, Teléfonos de México. It was the former state-run telecom company, and he wanted me to cover it. We had just gone through a big currency devaluation in Mexico. The currency was down 60%, and the outlook for the economy was not great. And the market was opening up to competition.
Just those few things.
A few things there.
Right.
I concluded then that, contrary to people's fears, that the Mexi devaluation had actually had a tremendous impact in reducing the cost structure of the company and also bringing their tariffs down in dollars. And their competitors were going to come in with dollar cost structures. So I thought that the fears the market had were probably overdone and the valuation was incredibly cheap. We ended up buying the stock. It took me a year, because it was not like a clean story, to get all of the portfolio managers who should have bought the stock, to buy the stock.
To convince them on the thesis.
One by one, and it was hard work. Luckily, the stock didn't go anywhere for a year, so that gave me some time. And then it ended up being a phenomenal investment for us. They spun out their wireless business a few years later, which was not even part of the thesis, and that ended up being a multi-bagger as well.
Let's pivot to your investment edge, and everyone's got a different investment edge. Some rhyme, but everything's a little bit nuanced or unique for an individual. What's yours?
My edge is I'm very comfortable with uncertainty, with cyclicality and volatility. And I think that is just due to the deep experience I've had in emerging markets. I've seen a lot of cycles in a lot of different countries. And also, I think my math background, where I do think a lot about, just break down what the returns could be and not get too bogged down in the, your amygdala going crazy about, oh my God, could there be a recession or something?
But you're also a contrarian by
Yes.
nature.
Yes.
So talk about that in your style. You're generally have a value tilt. You're a contrarian back to the value of Telmex 30
Yes.
years ago.
Yes.
Is that something that plays in your everyday investment themes or
Yes.
thoughts?
I'm very much a value investor. And I think value investors are optimistic people. You know, a normal person might say, oh, look, there's just some dirt there. And a value investor might say, no, I see a rose garden, right? The soil is so nice. Look at the climate, you know, just the right amount of sun. And so there's a little bit of dreaming about what could be. I do like to look at the what ifs, and I like when I think about my portfolio construction, I try to, one, make sure I have some things that might be cyclical, but overall, I also like to layer in some companies that I think what I would call, kind of boring companies that I think have option value. So trading at very low valuations, I'm going to get a decent return, very low risk of downside, and yet there is something that could happen that could make this a great return. So I like to layer in different things. And importantly, because of the capital system, I am able to do this and sort of focus on what I think is my core advantage as a value investor, while I have some of my colleagues doing growth stocks or other things.
So you also have to be patient.
Yes.
As a value investor, you have to exhibit a lot of patience because, like you said, in Telmex, it took a year
Yes.
of the stock not doing very much.
Yes.
And sometimes it can be years with an S.
Yes.
So how do you think of that patience? You talked about the capital system, and the primary driver of any individual's quantitative bonus
Right.
is their 8-year
Yes.
performance number, not their
Yes.
1 year.
Yes.
So you have the system that helps, but it's also a mentality of being patient.
It is. I am patient. I have learned over time that, you don't need to go in too early. My bias is to go in early. So I've learned maybe start small. One of the nice things about being a value investor is often where you're looking is not terribly popular. So it gives you a lot of time to get up to speed on a company.
Yeah.
And I try to take that time and that advantage and then wait.
So you've seen a lot of cycles in 31 years, and the volatility, especially in emerging markets, because you brought up Mexico, is extreme at times. What do you see today? Are there different opportunities that you're looking at for the next 5-10 years that are super compelling?
Yeah. I mean, well, one, I think, nobody has future facts, but I think the setup for emerging markets looks pretty good. We've been in a relative bear market for 15 years. I mean, there are some signs that things are looking better.
Relative to the S&P.
Exactly.
But still up, but not, but less so.
But pedestrian returns,
Right.
let's say.
Yes.
And I think we're in a period that I think will be beneficial to emerging markets. Probably, my view, a little bit of a weaker dollar, a little bit more inflation. And I think importantly, one area that I'm very excited about is we are seeing a more focus on corporate governance and improving shareholder returns in some of the Asian markets. We saw in Japan 4 or 5 years ago a big focus on, shareholder returns, actually driven by the Tokyo Stock Exchange. And you are seeing in Korea now, they've sort of lessons learned from that. It's been a great opportunity for us to go and find companies that, maybe these markets were before focused more on growth and less on shareholder returns. And I think that is shifting, and it's really a rich area to be looking at. And even China, we're seeing some of this.
It's interesting you say that. I mean, I've looked at those markets as well for 30-something years. And there have been different times in the past, especially regarding Japan, where you thought something had changed, but it really hadn't. This time feels super different. It does feel more secular in terms of the change of the mentality, corporate governance, driving shareholder value. It feels like something's dramatically different.
It is different. And one, the government, the Tokyo Stock Exchange has played a big role. Activists have been allowed to flourish a bit more. And then there's just this muscle memory that once people say, oh, we didn't really focus on ROE before. That was, we were focused on, growing our top line. We were focused on our employees. They were focused on many things that were important for any corporation. But shareholders were kind of at the bottom there. And so shareholders have just been moved up in the stack a bit more. And valuations are, still very reasonable in Asia. And I think it's just a great stock picker's market.
Yeah. And it's also a long-term story. You talked about the returns relative to the S&P 500. I think over the last 30 years, the S&P 500's done about 8% per year over the last 30 years. When you look for the next 10, 20, 30 years for emerging markets, it may be able to have that mid to high single-digit type annualized return.
Yeah, I think it's, we've had periods of 10-year stints. 2000, 2010 was a great period for emerging markets. A lot of people don't remember that. Fortunately or unfortunately, I do remember that. And I think we could be entering one of those periods. So I definitely think that having some emerging markets in your portfolio makes sense.
Great. Okay, I was in your office in New York, but in your office, I found this.
Yes.
So it traveled a long way to get here to LA, and I'll hold it so we don't have to pass it too much. Can you describe what I'm holding?
Yes, well, that's a crane, and I got that from a company, and it's a bittersweet story. This was a company that I got to know, had been around for about 50 years in Mexico, an EPC company, and great people, wonderful business. The peso crisis caused a bit of a problem for them, and I would say that also, management was not as focused on payments as they could be, and they were almost a little bit too forgiving, and they ended up having a payment crisis and actually went bankrupt. So it's a lesson for me that, this is not like the management was great, the business was great, and yet you have to think about all things. And I would not have guessed when they first came public that they would have gone bankrupt, and it happens.
And it happens. Well, I appreciate you sharing that. It's actually remarkably heavy, but I appreciate you sharing that with me, although that doesn't count as your lesson learned. So share a lesson learned that would benefit folks, because I think a lot of people are listening and watching these episodes almost as a master's class in investing. They're just hearing from so many folks with different experiences over 10, 20, 30, 40 years with Rob. Right. So tell us about a lesson learned that might be useful.
Well, before I came to Capital, on the sell side, I followed bottling companies and beverage companies, so including Coke and Pepsi bottlers. And so it was one of the first coverages I started up at Capital. And there was a company that I didn't own on the sell side. It was actually a great stock. And I never really liked the management, but it was like a hot stock, and they had done phenomenally well, truth be told. And I thought, well, I need to really re-underwrite this when I come in. Clean sheet of paper. I'm going to look at it. They were focused on our operations in South America, outside of Brazil. They were going into Brazil. It was a big new greenfield adventure. And there were questions about whether this was going to be great or not. And I did my numbers, and I said, well, you know what? It looks good. The numbers do look good. I think this is going to be fine. Fast forward, not so fine. 12 months later, the stock was down 60%, and we exited. Luckily, it wasn't a very big company. But there were a number of lessons learned. First, for me, I never really was comfortable with management. And I put that aside, which it still bothers me.
And that was a while ago.
Yeah, it still bothers me. Secondly, I am somebody you can ask. I never get FOMO. And I feel like I had a little bit of FOMO there. And so for me, it's always a lesson. I don't need to chase stocks that are running. I don't.
You can miss it. That's fine. There's plenty of opportunities.
Totally fine. Yeah. And so those were the two big lessons for me.
Yeah, that's interesting. The management, a lot of our investment professionals who I've interviewed talk about the importance of management. And everyone, on the scale from 1 to 10, no one thinks it's a 1 or 2, but people have different opinions, whether it's a 6 or a 10. Mm-hmm. It sounds like from that lesson learned, you're on the upper end. Where are you on that scale?
Honestly, it depends on the business. There's some businesses where you really need good management. But for me, it was also an issue of trust. There was just something in the pit of my stomach that
Yeah, and you didn't listen to the pit.
I didn't listen, and I listen to the pit now.
That's good. That's a good lesson learned, especially with the smaller company where it wasn't that painful in the overall portfolio. Mentors, I know you mentioned Rob. Are there other mentors that have been impactful to your career?
Yes. Well, I mean, I could do a whole podcast on all the people who've had an impact on my career at Capital. It's been unbelievable. But a couple of people, David Fisher, sadly passed away, former chairman of Capital. David was an amazing growth investor, very different investor than I am, but he had the ability to understand the motivations of management and extract that out of a meeting like nobody I've seen. And so I learned that from him. I don't do it the way that he did it, but it was super helpful for me to understand what motivates management. Shaw Wagner, another retired Capital associate, was instrumental along with David in building our emerging markets business back in the day. And Shaw was what I think of, and we have a lot of these people at Capital, but this quiet leader who leads by example. He worked so hard, was so nice, believed in you so much, and it made you want to work hard to live up to the vision he saw in you. And forever grateful, and I learned a lot from that.
And interestingly, the folks you mentioned and you are all here 30 to 40 years. I mean, that is one of the things about Capital Group. People come and they stay for a really, really long time. So you've been here 31 years. If you're going to meet where Rob is at 40, you got at least 9 left.
Yes.
Why are you still so passionate about investing in Capital Group? I'm glad you are, and we're grateful you're here, but what keeps you going and motivated in the same way?
I love investing. And if you love investing, there is no better place to be. The quality and the quantity of research and the information it's second to none. And the people are fantastic. I mean, super nice. That's table stakes. Super smart, collaborative, but independent thinkers. And I don't feel like I deserve to be here. I feel like every day I have to earn the right to be here. And I really feel that way. I also feel like I have been given an incredible opportunity, the focus of the firm on our clients. I want to make sure that I try in my small part to help the next generation have that same opportunity.
That's great. Very well said. I want to get into some personal things about you.
Yes.
You mentioned early on about cooking and liking to cook. What's your favorite? I have a couple questions on the game. What's your favorite thing to make as a chef?
Yes.
What's your favorite dish?
Well, I love anything that are stews or braises that you put what are pretty humble ingredients in. You do a little bit of prep, maybe some searing, and then you just let them sit. And they do all the work themselves. And you lift the pot, and it's a little bit like investing, like long-term investing. And this beautiful thing has flourished.
That's right.
So I do love that magic of cooking. I'm always in awe of that.
All right, we're going to end up with what we always do in this podcast.
Oh, yes.
And I'll give a little context in case we have some new joiners.
Yes.
This is in a mug that we always give to our guests, Capital Ideas on one side, and on the other it says, be obsessively grateful. One of the reasons I wanted to do this was just back in, you chatted about it a little bit with being at Capital Group and just grateful to be here and having to earn that right. Nothing's given to us. But it's also a societal comment about all of us collectively maybe having an opportunity to be more grateful in our daily lives. So I'll give you the mug. We'll send it to New York along with the crane. You don't have to go back with both.
Yes.
But what are you grateful for that you'd like to share?
Well, I am grateful for many things, but I think the thing that I am most grateful for is that I was very fortunate to have two parents who gave me unconditional love as a child, because I think that is just so foundational. It gives you peace of mind. In a way that I think that I don't take for granted.
Yeah, that's nice. That is something to be grateful for, and it doesn't happen every day. And when it does, you feel fortunate.
Yes.
Thank you for 31 years so far. There's a lot left in the tank, Lisa. Lisa's going to be with us for a while. But thank you for 31 years in making a difference in our clients' lives. I know you're passionate about it, and you're also very good at it. So
thank you so much.
And I thank you all for joining us again. I hope you learned a lot. I did. And I hope you have a great day.